Have you ever watched someone commit a crime so polished, so elegant, so buried beneath the surface of corporate success, that even the people sitting beside him in the boardroom applauded his genius? I have. And I didn't just watch. I documented everything. It was a quiet Friday just past 11:30 a.m. when I stood up during Crestline Equity's quarterly strategy meeting. The room was glass-walled, sunlit, filled with senior partners sipping sparkling water trading buzzwords like urban revival and capital acceleration. I set down a manila folder and looked directly at Randall Marston, the CEO. Calm, precise, emotionless. "You falsified HUD occupancy records on 3 subsidized buildings," I said. "That's federal fraud." The room fell silent. You could hear the air conditioning click. He didn't flinch. He just leaned back, smiled, and tapped his Mont Blanc pen twice on the table. In that moment, I understood exactly who I was up against a man who'd built an empire on polished lies, confident no one would ever question the numbers. And maybe no one would have. But I did. If you've ever felt like truth doesn't stand a chance in a world built on money, stay with me. This story might change your mind. Like, comment, or subscribe if integrity still matters where you come from. My name is Isaac Delgado. I'm 39 years old, and until recently, I was the senior internal auditor at Crestline Equity Group, one of the largest real estate investment firms in the country. We handled everything from Section 8 properties in the Midwest to luxury high-rises in downtown Los Angeles. On the outside, it was a company that symbolized upward mobility growth and urban renewal. On the inside, it was something else entirely. Before Crestline, I served 8 years in the Army, stationed overseas, twice mostly in logistics and systems operations. That's where I learned to be precise and cautious. You don't survive in combat zones by overlooking details. After I got out, I went back to school on the GI Bill and earned my degree in accounting. I've spent the last decade working in finance compliance and internal risk management. I'm not flashy. I'm not political. I don't chase attention. My job has always been quiet, methodical, finding patterns that don't add up and figuring out why. But this job wasn't just professional for me, it was personal. I grew up in South Central LA in housing projects that most people only see in headlines. I know what it's like when the hot water doesn't work and the landlord doesn't care. I know what it's like when a broken elevator traps someone's grandmother inside for 6 hours and no one comes to help because they're understaffed. So when I landed the job at Crestline, I told myself I was helping bring dignity to people who'd been forgotten. For the first 2 years, I believed in the mission. We were streamlining systems, improving housing inspections, expanding low-income availability in key metro zones. But then little things started to break the illusion: missing documentation, inflated maintenance costs, tenant complaints that never made it to upper management. I started pulling threads, and what I found underneath wasn't inefficiency. It was something darker. When I say I took this seriously, I don't mean just as an employee. I mean as someone who'd seen what happens when the system fails, the people it's supposed to protect. Housing isn't just a business, it's shelter, it's survival. And in this company, survival had become a commodity, packaged, monetized, and sold with a smile. And I was about to find out just how high the cost of speaking up could be. It started with a spreadsheet. Just one. A routine audit on a portfolio of mid-tier Section 8 properties in Milwaukee. I was reviewing occupancy certifications when I noticed something strange. 2 units at a building on South 19th Street were listed as currently occupied with full subsidy payments processed for the last 9 months. But the tenant files were thin. No income verification documents, no signed lease renewals, and most curiously, no utility charges. No electricity, no water, no trash pickup logs. At first, I assumed it was a clerical issue, maybe a delayed update, maybe someone forgot to upload paperwork into the system. But when I emailed the regional property manager, she responded within 10 minutes with 2 files that looked suspiciously recent. Same formatting, Same metadata timestamp. Both PDFs had been created within the hour of my request. Too clean, too fast. I ran a quiet cross-reference with internal maintenance logs. If those units had been occupied, there should have been work orders, plumbing lock changes, HVAC servicing, anything. But the work order history showed no activity since the previous tenants moved out nearly a year ago. Now I was curious. I checked other buildings in the same portfolio, Cedar Gardens Valley Pines, a low-rise complex on West Morgan. Same pattern. Units marked as occupied, yet no corresponding tenant profiles. Subsidies were being processed each month. Payments issued, service requests fabricated. It was like someone had built an invisible population and was collecting rent for ghosts. Over the next 2 weeks, I began building a map matching occupancy records against tenant interviews, utility logs, and vendor invoices. The more I dug, the more surreal it became. Dozens of units across multiple properties had been systematically misrepresented. Fake tenants, fake maintenance requests, even fake inspection reports signed off by internal contractors. And then came the biggest red flag of all, a series of vendor payments routed through a maintenance company called Nolan Property Solutions. On paper, they provided landscaping and HVAC repair across the Midwest portfolio. But their tax records were a mess. The address was a virtual mailbox in Scottsdale, Arizona. No listed employees, no client website, no photos, no reviews, no service history, nothing. Except for one detail. The company was registered to Kenneth Marston, Randall Marston's younger brother. At that point, my gut twisted. This wasn't a glitch. This wasn't someone gaming the numbers to hit performance bonuses. This was fraud, intentional, layered. Someone had built a secondary revenue pipeline, siphoning federal housing money into a shell company run by the CEO's own family. I didn't say anything right away. I wasn't ready. Not yet. Instead, I did what I'd been trained to do. I kept watching. I kept documenting. And I waited for the pattern to show itself in full, because one misstep could cost me everything. And I had a feeling this was only the surface. The first time I met Randall Marston in person was at the company's annual retreat in Aspen. Crestline had flown out a mix of executives and department heads for what they called a visionary leadership summit. I wasn't supposed to be there. Technically, internal audit doesn't usually get an invite to cocktail hour with the founders, but my recent review of a risk compliance package had apparently impressed the right people. They brought me along as a gesture. Randall made an entrance the way people in power often do, unannounced, late, and with a smile that made you feel like you were lucky just to be in the same room. He was tall, with perfectly tailored wool coats and a way of speaking that sounded both intimate and rehearsed. Every sentence landed like a TED Talk. He shook hands like a politician and made eye contact like a salesman who already knows you'll buy. But behind the charm, something felt off. He'd give long monologues about disrupting housing models and monetizing compliance blind spots. At one point, during a fireside Q&A, someone from asset management asked about the risks involved in federal audits. Randall just chuckled and said, "Risk is what happens when you let the wrong people read the fine print." People laughed. I didn't. Later that night, he approached me directly. "Delgado, right? Isaac Delgado. You're the quiet one who keeps finding things." It wasn't a question. It was a statement and a warning. I nodded. Just trying to make sure we don't end up on the wrong side of a federal inquiry. He grinned and clapped me on the shoulder. "Smart man. But don't get too lost in the details. Real growth requires a little flexibility. Sometimes the rules weren't written for where we're going." That was the moment I understood who he really was. He wasn't a real estate guy. He was a brand. He had no interest in the neighborhoods we were supposed to improve or the families we were supposed to serve. For him, affordable housing was a pitch deck, a leverage point, a story you tell to get funding. And if that story had a few empty buildings and fabricated tenants behind it, well, that was just creative positioning. Over the next few weeks, Randall's requests became more specific. He wanted direct access to internal systems, something executives never touch. Asked me for detailed server logs, occupancy traffic data, and background information on our compliance thresholds. When I hesitated, he leaned in and said, "Don't be so rigid, Delgado. You're too talented to be stuck thinking small." I nodded, but I knew right then I wasn't dealing with someone reckless. I was dealing with someone dangerous. After that Aspen weekend, I stopped assuming I was imagining things. Randall wasn't just bending the rules, he was orchestrating something far more deliberate. I started working late, coming in early, and keeping my own audit trail separate from the company's servers. Not out of paranoia, out of necessity. I built a master file layer by layer, a spreadsheet that cross-referenced every subsidy payment tied to Crestline's Midwest housing portfolio for the past 18 months. HUD disbursements unit occupancy records, utility usage vendor invoices, even city inspection reports. The deeper I went, the more coordinated it all looked. One building in Cleveland had 14 occupied units according to Crestline's internal reports, but the tenant registry only listed 9 active leases. No power usage in 5 of them, no trash pickups. And yet full federal subsidy payments over $9,000 a month were being processed for all 14 units routed through Crestline, then sent to Nolan Property Solutions for maintenance and unit servicing. Digging further, I noticed that Nolan Properties invoices always came in just below the dollar threshold that would trigger external review, $4,950 here, $4,975 there. And always on the 27th of the month, perfectly timed to coincide with HUD subsidy releases. I started mapping transactions against property visits and inspection reports. That's when things got worse. Several buildings had falsified inspection certifications, digital signatures from a contractor named James Everett. Only there was no James Everett in the state contractor registry. I ran his tax ID through a compliance check. It came back flagged, registered to a holding company based in Panama. That's when the fraud began to crystallize. Randall Marston had constructed a system that abused every layer of oversight fake tenants to qualify for federal housing subsidies. Shell vendor companies to launder the funds, phantom inspections to keep buildings technically compliant, carefully timed invoices to avoid triggering internal flags. But the most damning connection came when I reviewed campaign contributions tied to Crestline's executive board. Randall had donated over $100,000 in bundled funds to a local city councilman money that on the books appeared to come from employees of Nolan Property Solutions. All fake. The same ghost employees tied to the fake maintenance logs. That moved the story from financial fraud into political corruption. If Crestline's web of deceit reached into the political pipeline that meant local housing approvals, rezoning decisions, and government inspections were potentially compromised. And that meant one thing. This wasn't just about money anymore. This was about power, and it was being bought with the same funds meant to keep working families housed. By the time I finished compiling the full picture, I had a binder 2 inches thick. Emails, invoices, payment records, screenshots, metadata, testimonies from former tenants who had been relocated mid-lease without explanation. The paper trail wasn't just suspicious, it was surgical. Randall hadn't made a mistake. He'd made a business model. And if I was going to take him down, I couldn't rely on the system I was working inside. I had to prepare for what would come next. Because exposing this kind of fraud doesn't get you promoted. It gets you erased. At first, I thought I could handle it quietly. I didn't need a scene, I just needed someone reasonable inside the company to see what I was seeing. So I reached out to Ellen Sharp Crestline's CFO. She'd been with the firm since the early days. Known for her straight-shooting style, she was one of the few executives I actually respected. I believed naively that if I showed her the documentation, she'd act. We met in her office late on a Wednesday afternoon. I laid out the summary of what I'd found, just the basics. A handful of forged occupancy records, suspicious vendor invoices, and one shell company registration tied to Kenneth Marston. I kept the rest close. My insurance. Ellen listened quietly, her fingers steepled under her chin. She didn't interrupt. When I finished, she leaned back and said, "You know what this sounds like, right?" I nodded. Fraud. At best. Criminal negligence more likely. She didn't argue, just said, "Leave everything with me. I'll escalate it appropriately." That was the last normal conversation I had at Crestline. The next morning, I arrived at work to find my key card deactivated. I was locked out of the building, my laptop access revoked. 10 minutes later, I got a call from Human Resources. They didn't even try to hide it. Mr. Delgado, the HR director, began reading from a script. "You're being terminated, effective immediately, for unauthorized access to protected databases, breach of internal protocol, and inappropriate data retention practices." I laughed quietly. "You mean auditing the housing records I'm literally paid to audit?" She didn't respond. Just said I'd be escorted to collect personal belongings and would need to sign a non-disclosure agreement in exchange for severance. Then came the final blow. As this was a breach of company policy at the executive level, she continued, "Mr. Marston has requested your immediate removal from all communication chains. Your name will be excluded from the official audit trail." Just like that, I was erased, rewritten out of the company's narrative like I'd never existed. Security walked me to my car. No one said a word. No one made eye contact. I sat in the driver's seat for a long time, hands still on the wheel, heart strangely calm. They thought it was over. They thought they'd buried the leak. But what they didn't know was that I hadn't come to Ellen Sharp empty-handed. I had never stopped keeping copies off-site, encrypted, time-stamped. What I gave her was just a decoy, a test to see if she was part of the rot. Now I had my answer, and I had everything I needed to bring the whole system down. They thought I'd go quiet, disappear, maybe take the NDA cash, the severance, and find a job somewhere safer. That's how these things usually go. The problem was, Randall and his people didn't understand who they were dealing with. I didn't get into auditing for the money. I didn't build my career on comfort. I built it on the belief that when systems fail, people suffer. And if I let this go, I'd be no different from them. So I got to work. From the moment I'd suspected something was off, I'd maintained a parallel archive. I backed up every document I touched onto an encrypted external drive stored in a fireproof safe in my garage. I had metadata timestamps, internal memos, budget revisions, inspection reports, and payment records with corresponding bank activity. I even had a set of screen recordings from our internal portal showing the occupancy flags being altered in real time at night from IP addresses tied to Randall's personal office. But it wasn't just paperwork. Over the years, I'd built quiet relationships with field staff site supervisors, maintenance workers, part-time leasing agents. After I got fired, I reached out to them. I didn't ask for whistleblowing, I asked for their experiences. And what I got was damning. Stories of being told to just sign off on inspections that never happened, of cleaning empty units that were still listed as occupied, of watching families get evicted with no record in the system because their names were never properly entered in the first place. I created a master report, one that would make any investigator's job easier. Section by section, I walked through the timeline when the subsidy fraud started. How the vendor shell company funneled money, who signed what and when, where the political contributions went, how the fraud impacted housing stock for real families. Each piece was cross-referenced with an evidentiary backup. No speculation, just facts, receipts, and federal statutes that had been clearly violated. I knew that going straight to the press wouldn't be enough, not with how deep Crestline's influence ran. I needed someone with reach and with teeth. So I called Maria Epps, a former investigative reporter I'd known since my early audit days in Chicago. She now ran an independent outlet focused on corporate accountability. I didn't pitch her a scandal. I gave her a war file. Then I picked up the phone again, this time to the HUD Office of Inspector General, the division responsible for investigating housing fraud involving federal subsidies. The woman on the line asked me to explain the scope. I told her plainly. We're talking about over $12 million in fraudulent federal claims routed through shell vendors propped up by falsified inspection reports and possibly linked to political influence in at least 2 cities. There was a pause. Then she said, "You just became our top priority." That night I didn't sleep much, not from anxiety this time, from clarity. I wasn't waiting to be rescued. I was starting the fire myself, and I was going to watch the whole house come down. It happened faster than I expected. 3 days after my call with HUD's Office of Inspector General, I received a message from a blocked number. When I picked up, the voice on the other end was calm, formal. "Mr. Delgado, this is Special Agent Karen Lively, HUD OIG. We've reviewed your documentation. We'll need to meet. Are you available tomorrow morning in Chicago?" I flew out that evening. The next day I sat in a conference room inside a nondescript federal building downtown. Across the table were 3 people: Agent Lively, a forensic accountant from the IRS, and a quiet man in a dark blazer from the DOJ's Public Integrity Section. I laid out the full case files, timelines, whistleblower statements, everything. They didn't interrupt once, just flipped through the evidence, cross-checked their notes, and asked precise follow-ups. When I finished, Agent Lively said, "Mr. Delgado, we'll be coordinating with the IRS and DOJ. If what you've documented is confirmed in our systems, we're dealing with a multi-agency fraud case." Then she added something else. "We'd like you to be present when we serve the warrants." 2 days later, I was back at Crestline's corporate tower, not as an employee, but as a cooperating witness. At exactly 9:03 a.m., 4 unmarked black SUVs pulled up to the entrance. Agents in Navy windbreakers moved swiftly through the lobby. Behind them were 2 federal auditors and a forensic tech team hauling equipment cases. The receptionist looked confused. Within minutes, the front desk was cleared and the elevator locked down. Randall Marston walked out of his office just as the agents reached the executive floor. He stopped mid-stride when he saw me standing beside Agent Lively. "What is this?" he asked, trying to keep his voice level. She stepped forward, showed her badge. "Mr. Marston, we're executing a federal search warrant related to housing subsidy fraud, money laundering, and obstruction of justice. Please step aside." He didn't move. "Delgado is a disgruntled former employee." "You can't take his word, we're not," she interrupted. "We're taking his documentation, your records, and direct access to your systems. Please don't obstruct this investigation." The tension in the room was palpable. Crestline's senior staff started to gather. Ellen Sharp appeared from down the hall, her face pale. Someone whispered, "Is this real?" The forensic team split up, 1 team to the server room, 1 to financial records, 1 to HR. Within an hour, they found what they needed: transaction logs showing payments to Nolan Property Solutions for non-existent work, emails between Randall and his brother coordinating invoice amounts and due dates, digital fingerprints connecting Randall's credentials to manipulated occupancy records, full ledger reconciliations proving the same tenant IDs had been duplicated across properties. But the most damning evidence came when they ran Crestline's internal data against HUD's database in real time. The fraud wasn't isolated, it was systemic. Across 11 states, Crestline had used the same tactics: fake occupancy, falsified inspections, coordinated vendor payouts to steal over $12 million in federal housing subsidies. And worse, in 3 cases, delayed inspections had led to major structural failures, one of which was tied to a building fire that injured 2 children. What began as a quiet audit had become a full-blown federal case. And as Randall was escorted into a private conference room for questioning, he looked over his shoulder at me, still calm, still trying to gauge if this was salvageable. He didn't understand yet. This wasn't just a legal reckoning. This was the beginning of his legacy, unraveling in front of the very people who used to praise his genius. In the weeks that followed, the unraveling happened at a speed even I hadn't anticipated. The Department of Justice announced a joint investigation into Crestline Equity Group, citing widespread misuse of federal housing funds, corporate fraud, and willful endangerment of low-income tenants. The press caught wind of it within 48 hours. What started as a niche housing scandal exploded across media channels. Forbes, NPR, and even 60 Minutes ran segments about it. Randall's face, once used in ads promoting the future of affordable housing, was now plastered under headlines about betrayal and systemic greed. 3 days after the raid, Randall Marston was formally indicted on 17 federal charges, including conspiracy to commit wire fraud, obstruction of justice, and falsifying documents submitted to HUD. The indictment also named Kenneth Marston, his brother, as a co-conspirator. Their vendor scheme, Nolan Property Solutions, was exposed as nothing more than a laundering tool for defrauding taxpayers. The shell company had funneled more than $6.4 million in payments for maintenance that never happened. Ellen Sharp, the CFO I once trusted, flipped within days. She handed over emails, signed budgets, and internal memos that showed she had knowledge of the fraud months before I brought my concerns forward. Her testimony confirmed what I'd feared. Crestline's leadership didn't just overlook the fraud. They protected it. She took a plea deal. But the real weight came when HUD investigators tied Crestline's fraudulent inspection records to 3 major incidents of housing failure, one of which had resulted in a 4-alarm fire in a Cincinnati building with a faulty sprinkler system. The investigation revealed that Crestline had faked compliance reports to avoid paying for necessary repairs. 2 children had suffered burns. A disabled tenant had been trapped in her unit for nearly 20 minutes. That changed everything. What had begun as financial crime now entered the territory of criminal negligence with direct human consequences. I was called to testify in federal court. So were former tenants' maintenance workers and 2 IT staffers who had quietly saved time-stamped logs backing up my claims. I remember sitting in the courtroom watching Randall across from me, dressed in a tailored suit, but visibly cracking bags under his eyes, his hands twitching when the prosecution displayed the email where he'd written, "Keep all vendor invoices below $5K. We can't trigger compliance flags again." The final twist came when forensic accountants uncovered campaign donations linked to multiple city officials. Crestline had been laundering political contributions through employee bonuses and dummy vendors to push rezoning approvals, demolish public housing, and flip subsidized properties into market-ready condo units. The DOJ expanded the probe-opening investigations in 4 cities. By the time the trial ended, Randall Marston had been convicted on all counts. The judge sentenced him to 12 years in federal prison and ordered over $15 million in restitution, including reimbursement to HUD legal penalties and emergency housing funds for displaced tenants. Crestline Equity Group was dissolved within 60 days of the verdict. Its assets were frozen, its brand name blacklisted from all federal housing contracts. The company that once bragged about reshaping America's housing landscape had become a cautionary tale taught in business schools and ethics courses. As for me, I didn't celebrate. There was no victory dance. Just a quiet moment of stillness when the final verdict came down, knowing that justice, real institutional justice, had prevailed, not because I shouted louder, but because I documented harder. And that made all the difference. I never set out to bring down a company. I wasn't trying to make headlines or become a symbol for anything. I just saw something that was wrong and chose not to look away. 6 months after the trial, I was hired by a federal oversight agency focused on housing compliance. Now I spend my days helping prevent the kind of fraud Crestline perfected. I visit city councils, train auditors, and speak to teams who still believe numbers should mean something. The work isn't glamorous, but it matters. Because for every dollar stolen through corruption, someone pays for it in cold nights, in mold-covered ceilings, in evictions that never had to happen. What happened at Crestline wasn't just a scandal, it was a warning about how easily the vulnerable get buried beneath polished spreadsheets and glowing investor reports. If this story moved something in, you share it. Integrity needs more oxygen in this world. And if you've ever stood alone for what was right, drop a comment. I've seen it too. Your voice might be what gives someone else the courage to speak up. And if you believe stories like this deserve to be heard, subscribe, like, or pass it on. Because sometimes justice starts with listening.